All right, so mostly what we're going to be talking about in this little video is a concept of, or this item that we have to consider in manufacturing called cost of goods manufactured. But I do want to real quickly discuss period costs with you. We've talked a lot about product costs, and so period costs are any type of costs that are business related but are not carried in inventory, which is actually what it says right here. So any cost that a business incurs that is not a product cost is a period cost. I want you to understand that these are pretty obvious, like office supplies and a CEO's salary. These are expenses that are going to impact a company's net income or net loss, but they're clearly not associated with the making of a product. We should also note that selling expenses, including expenses for freight out of goods that have been sold, these are also period costs. Now, they're related to the selling of a product or the shipping of a product, but they are not part of making the product. So any business expense that is a product cost, i.e. necessary to complete the product, is a period cost. Okay, so you should probably review the concept of period costs. It always mildly surprises me how much that confuses students. All right, so it says here, preparing income statements, cost of goods manufactured. Well, we've looked at income statements before, and we've never had this item yet, cost of goods manufactured. So it's safe to say right away that cost of goods manufactured is an item that is only going to appear on the income statement for a manufacturer. So let's see what it says. It says that the cost of goods manufactured represents the total product cost of goods completed during the current period and transferred to finished goods inventory. So I want to tell you that what you have dealt with in your financial accounting courses when it comes to inventory, you were dealing with finished goods inventory. It's just that you called it simply inventory. For a merchandiser, inventory is finished goods inventory. It's just that instead of making the finished goods, we just bought them, whether we're a retailer or some type of a middleman, wholesaler. But here, cost of goods manufactured represents the total product cost of goods that have been completed in full during the current period, whether that's a month, a year, a week, and transferred to the finished goods inventory. So it says that the cost of direct materials used in production can be derived using this following formula. This is a very basic formula. Beginning inventory of materials, whatever we started off with, plus whatever we purchased during the period, minus ending inventory of materials equals the direct materials used in production. This part right here where I'm hovering, this is not cost of goods manufactured. It is exactly what it says. What does the equal sign stand for? The equal sign stands for is direct materials used in production. So what we're saying here is that we're going to have a couple of steps to come up with cost of goods manufactured. All right, so continuing on, it says that the direct materials are then used to calculate the cost of goods manufactured as follows. Direct materials, or direct materials used, plus direct labor, plus manufacturing overhead cost, plus beginning work in process inventory and minus ending work in process inventory equals cost of goods manufactured. So, we've introduced some new terms here, have we not? We have. We talked about finished goods inventory up here, but what we need to understand is that with inventory, we start off perhaps with materials, and we're going to add some labor to that. But that doesn't mean that at the end of the month or the end of the year that everything that we have started is completed. So with a manufacturing company, we're going to end up having three types of inventory. We're going to have direct materials inventory. We're going to have work in process inventory, which is almost always abbreviated as WIP inventory, which these are items that are partially completed. And then we're also going to have finished goods inventory, and these are all going to appear on the face of the balance sheet. So we're not going to have one inventory account, we're going to have three. So again, direct materials that we've calculated up here, plus direct labor, plus manufacturing overhead costs, plus our beginning work in process inventory, and minus our ending work in process inventory is going to give us our cost of goods manufactured. Notice there's a common trend. Whenever you were in your financial accounting class, you learned, what did you learn? Regarding the cost of goods sold formula, and this is for a periodic inventory system, not a perpetual, but it was beginning inventory, so beginning plus purchases minus ending inventory equals cost of goods sold. So beginning plus whatever we're doing in the period minus ending. Ending is always the minus, beginning is always where we start. Okay, so we've seen this formula before, and if we jump back over here to the slide, we're seeing the same thing again. We want to determine how much we used in materials and production. We'll take our beginning inventory of materials, we're going to add purchases, and we're going to subtract out the ending inventory of materials to arrive at the amount of direct materials used in production, and that's this part right here, direct materials. Now, we don't have to do that with direct labor. This is a conversion cost as well as a prime cost, so we're just going to add it. Because once that labor is been used, it's been used. And whatever the cost of direct labor is going to go into cost of goods manufactured. No matter how much we've completed in full or partially completed, it doesn't matter. Same thing is true with manufacturing overhead cost. Now we're going to take the beginning work in process inventory, the inventory that we had started in a prior period, and we're going to subtract the ending work in process inventory. Again, beginning inventory is a plus, the ending is a anything beginning is a plus and anything ending is a minus, and we're honoring that right here. Plus beginning work in process inventory minus ending work in process inventory equals cost of goods manufactured. Okay, so that's a lot. That's a lot. But if we look at some examples, I think we can understand it perhaps a little bit better. So they want us to calculate the direct materials used in production. This is for Blue Denim Company. Again, they make jeans if you haven't figured that out already. On May the 1st, Blue Denim had $68,000 of materials in inventory. During the month of May, Blue Denim purchased $210,000 of materials. On May the 31st, that's the end of the month, materials inventory equaled $22,000. Calculate the cost of direct materials used in production month of May. Well, let's just do that. So we have 68,000 to begin with. We added to that 210,000. That together is going to be 278,000. But we still have 22,000. So that's 22,000 that was not used in production. So we're going to come down here and we're going to subtract that out. And that's going to give us direct materials used in production for the month of May, 156,000. So our direct materials used is our $68,000 beginning materials. I'm abbreviating in the interest of time, plus what was it, $210,000 in purchases, minus $22,000 of ending materials is going to equal $256,000. And so here we have our final calculation. Our materials were $68,000 at the beginning. We purchases of $210,000. We're going to subtract out our ending materials inventory into the month, $22,000, and that is in fact going to give us $256,000 direct materials used in production. And this is going to be the first component, our cost of goods manufactured, that we're going to look at here in just a moment. All right, so let's go ahead and do that. How to calculate cost of goods manufactured. Again, Blue Denim Company makes blue jeans. Hopefully by now we've got that figured out. During the month of May, Blue Denim purchased $210,000 of materials. We already talked about that. And incurred direct labor cost of $135,000. We have not talked about that. They also incurred manufacturing overhead of $150,000, or that's what we're going to apply to cost anyway. On May the 31st, materials inventory equaled $22,000. We've already accounted for that. Inventory information is as follows. Work in process at the beginning of the month is $50,000, and at the end of the month is $16,000. Now, this materials business, we've already taken care of this. Okay, so we need to focus our attention now on let's see here. Direct labor of $135,000, manufacturing overhead of $150,000, and work in process beginning $50,000 and ending $16,000. So before we get to that calculation here, if you recall, we calculated our direct materials used as $256,000 plus what? Now let's go back and take a look. Plus direct labor of $135,000 and manufacturing overhead of $150,000. And I'm going to go ahead and put what this is here to keep our thoughts in order. Materials used plus $135,000 of direct labor plus $150,000 of manufacturing overhead, I'll abbreviate there, plus plus beginning work in process of $50,000 and minus ending work in process of $16,000. And I'm going to put beginning work in process, minus $16,000, end WIP. So let's bring our calculator over here. $256,000 in materials used for the period plus $135,000 direct labor cost plus $150,000 manufacturing overhead, plus we had $50,000 in work in process. That's value of work in process that was not completed, minus $16,000 that we still have left. This $16,000 has not been completed, equals $575,000. Not sure if I can fit that in. I think we can. That's $575,000. $575,000. Okay. Now, let's go back and check out our math. And there it is. We already did this calculation previously. We then added direct labor and direct manufacturing overhead to come up with $541,000. We had $50,000 in work in process. That's inventory that had not been completed. We now have $16,000. What that tells us is there's $34,000 here that was completed, that was manufactured in this period. So we have to essentially take the 541 and then the difference between these two numbers and add them. In this case, work in process went down, so cost of goods manufactured is actually going to go up from this total. But to keep it easy, we're just going to always remember, we're going to add beginning work in process and we're going to subtract out ending work in process, and we're going to come up with cost of goods manufactured of $575,000.